Okay, good morning and welcome to Tax Practice Pro. Today's webinar is a collection case with the ever popular Marc Dombrowski. So as the event goes through, it's scheduled for 50 minutes. We're going to stay on until everyone's questions are answered or until Marc is done speaking. If you need assistance during the webinar, you can call the office 800-943-1750. Someone will be happy to help you with whatever your issue is. If you gave us your PTIN during the upload when you registered, we will load your continuing education this week. If anyone did not answer that they needed CTEC, we are CTEC approved. Please send an email to the office, John at Tax Practice Pro. Happy to make sure that we give you CTEC approval too. As far as certificates, there are in excess of 200 people registered for this webinar. I don't find it hard to believe people would pay $0 to listen to Marc. In any event, it's going to take us a bit of time to get certificates out. So please give us about 3 weeks to get those certificates out. If you're a CPA and you're needing to renew your license in the next couple of weeks, email us and I'm sure we can put you at the top of the pile and get that out. Otherwise, I'm going to sadly cede control over to Marc. I want to add one other thing. This is an actual live case of Marc's where we redacted all of the personally identifiable information so we could comply with 7216 and the Gramm-Leach-Bliley Act. There are a couple of instances where you are going to see prices of things. I want to be clear that we're not suggesting that you should price your services anywhere near what he does. It explains why he's so destitute. But we don't want you to think that we're colluding either, and this is just the reality of using a live case. So without further interaction from me, I'm going to switch this over to Mr. Marc, and we're monitoring for questions, so please use the question box if you have any. You should have control now, Marc.
I do. So everybody should have up on their screen, and I do see that. Everybody has up on their screen this is the sheet that we're going to follow as best we can and try to go through it as best we can. As John said, this is our first shot at doing this remotely. This is my first webinar, so for me completely, first one ever. The genesis of this was Lily Tran, EA out on the West Coast in Washington State, had asked me on Facebook to go through a collection case with her. I had signed 2 cases last week. One, unfortunately, is a 100% estate case, so we cannot use that one. It was a residency audit case that the client had lost, and he wants me to help him with collections. This case that I have that I signed up last week, Wednesday, Thursday, Friday, each day had little bits and pieces of information coming in. Monday, even more information. Wendy, and then Lily Tran, and then another EA, I believe Lori, asked to join in. So at that point I said, listen, we're going to be a Skype or conference call. John and I have been meaning to do this for a while. So it ends up, I said, let's just do this as a webinar, and what you see before you is the product of us whipping this together. Basically, what I do want to go through is the entire genesis of a case. This case was, let's call this Tim. Timothy is the taxpayer. He is, as we see, he is a single guy. The referral came in from one of my favorite EAs in New York City, and she called, gave me a little bit of the information ahead of time, said that on Tuesday the taxpayer would be coming to her office to go through some information, and then Wednesday we do a follow-up call. At that Wednesday follow-up call, he brought his credit card. So I was able to get the entire retainer right off the bat. That is fairly unique, which is great. The EA walked the person right into my door almost. Just for a little clarification, Buffalo is about 6.5 hours northwest of Manhattan. So as you can tell, and I've said this a million times, I don't have that funny New York City accent. I am a New Yorker forever, and the person was not in my office when I signed them. It was completely done by phone conference and email at that point. Throughout the seminar, webinar, I will reference Canopy. It happens to be the software that I use. Canopy, for me, as a practitioner who has a significant number of cases, it is vital for me for the history notes, for the ability to retain documents, emails, different things like that. They have unlimited document retention, that sort of stuff, and a client portal, obviously, for exchanging information, which I used in this case. I'm not promoting either software. I do promote Roger's software throughout the webinar because of a lot of different reasons. Number one, he has the best transcript analysis out there, hands down. Okay, beginning now. So the first, page 2, would be the client activity record. This is a blank client activity record. This is what I use, even though I will be taking notes in Canopy. There's a note section, as well as I will also take manual notes, period. No matter what it is, I'm never getting away from paper, unfortunately. I wanted to give you guys a clean copy of one. Page 2 is the client personal contact information. I call this my client contact sheet. I gave you a blank one, and then the one that I filled in this day. Even though I've been doing this as my 24th year, I still will use the client contact sheet to help me remember, reference different things that I need to do and ask in a potential client call. We're not going to go over the client contact sheet in detail, but we're going to see how I filled it in. And actually, the way this page, whatever this might be, page 4, is an older version of my client contact sheet. I wanted to give you guys I wanted to give you guys a sheet of what it looks like, a different version. Okay. So here we go. This was the 14th last week. It was actually Monday when I took this client contact sheet. Tim X, I had to instead of redacting the heck out of it, and there were some typos, because, you know, it's me. There's going to be stuff all over the place. There's going to be scribbles, lots of little squares, and I like to do pine trees while I'm scribbling, and redid this basically. The taxpayer lives alone. He is unmarried. Go through this. I put in the upper left-hand corner, upper right-hand corner, referred by the person, whoever it was. Their name, obviously, they live alone, unmarried. He makes silver objects, and that was important to me. He was a jeweler, is a jeweler. Wanted to make sure that he had no inventory, because when you're a jeweler, one of my questions was, what kind of assets? He is self-employed, no assets, no real estate, no vehicle, no stocks, and the EA mentioned no money, which obviously concerns people. Inherently in representation work, you are dealing with taxpayers who don't have money. That is a generality. By that I mean, if they're not walking in your office asking, where do I invest $50,000 or $500,000? They're walking in your office saying, I can't pay $50,000, help me. The clientele inherently will have a problem getting money together for you or the IRS, or they wouldn't need you. It's the nature of the beast. I also circled on here the taxpayer's sole proprietor and that he's still working. He owes $18,000 on a 2012 SFR. And $79,000 on an SFR that New York State did for 2011. Why the Internal Revenue Service did not do an SFR for 11, 13, 14, 15, I cannot answer that question for you. Many times I will see the IRS SFR unit, their consistency not being present. Inconsistent, spotty. Client who hasn't filed for 25 years. I had one that for 25 years he did not have a single SFR, and he was a W-2 employee for one global company making over 100 grand, and still the IRS never picked him up in the underreporter unit. Per the EA and the taxpayer, he's unfiled 2011 through 2016. The EA prepared 11 and he never mailed it in. The taxpayer looked at the dollar amount on it, was not happy with it, and basically put it in a drawer. I hear that story constantly. As far as assets of the taxpayer, none. I will start scribbling a plan. Start explaining to the person about compliance. That says compliance. And compliance is twofold. Filing, obviously he needs to prepare the last 6 years, 16, 15, 14, 13, 12, 11. We're going 11 through 16. That is his filing compliance aspect. The second part of it is a percentage, a customized 1040 ES plan. Because obviously the guy's making jewelry, he's getting paid, and he's not making his estimated payments. There are very few estimated payments throughout this entire case. We will see the transcripts of account. I ended up, the client signed up, like I said, and I ended up going and calling practitioner hotline so that I could have the transcripts faxed to me on Monday morning so that I could put this seminar together. It's a lot easier of a case to review with y'all when I have the actual transcripts, which are part of the presentation. So again, compliance is two parts: filing and your current estimated payments. The second thing was based on the conversation with the taxpayer, and you do not want to prejudge the people either way. Are they going to be a good offer candidate? Are they going to be an installment agreement? Are they going to be a currently not collectible? The step 2 of my plan was to, based on the financial statement, get the client in a situation where we could humbly ask ACS for a hardship, currently not collectible status, which again is just a administrative status. It is nothing legal. It does not mean the IRS has to or can or even will do an offer in compromise. And then look at his OIC options. That's what that says on number 2. Number 3, New York State has a voluntary disclosure program, and I obviously am speaking to people who don't even have state taxes, don't have a voluntary disclosure program, but New York State allows us to request a 3-year look back so that we're only looking at 14, 15, 16, and as we'll see later on, it saved the guy a boatload of money, me just suggesting that. My recommendation for that was he had no money anyways to pay the state the money, and he had IRS debts. That's what that says down over there. I quoted the case at $1,750 for work until the end of the year. I generally try to price that retainer for the first 30 to 45 days of work where I think I'm getting involved, going to get transcripts. We're going to find out different things about the realities of the case, perfect the financial statement. I'm hopeful that that takes place in the first 30, 45 days. But I priced this case longer because I knew we were going to be filing an SFR protest, which is an original 1040, as well as all these tax returns. It's going to take them 60, 70, 80, 90 days for these returns to post. I figured I priced the case for my time and effort of really holding off ACS while these returns post and get us into the new year where I would price the case for additional fees. Over in the right-hand margin of my client contact sheet are my notes of what I explained to the EA, what the EA would be doing for the IRS for 2011. She's going to give it to me to file with ACS because that return was never filed. The 12 and 13 she was getting to me, and I was going to mail them into Kansas City, happens to be our service center for processing. And then I explained to her that for the federal only, she could e-file 14, 15, 16. We want to get all those returns in the hopper. You don't want to have a client who's being collected on the $18,000 for 2012 on the SFR and is not in compliance. So the faster you get those returns in, married filing separate, single, head of household, and that's just a point of practice. Don't rush into married filing joint. Yes, it's a better filing status for purposes of taxation, but you will be in a situation where you could be looked at as if you did not rush into it. Why now do we have a spouse involved that had the taxpayer, instead of owing $100,000, he owes $125,000 that he can't pay anyways, but now his wife's assets, properties, her inheritances, potentially a spouse's assets are on the line. So that's why you don't rush into married filing joint. Then for the state, I asked her to give me really 2011 through 2016 on paper. There ended up being a little error in her office, and the 2015 was e-filed. Either 15 or 16, we'll see, was inadvertently e-filed for the state. That's something that I explained to the EA that won't be a deal breaker with the voluntary disclosure program. And that is why I told you when I signed up the client, every day I did something. I needed to immediately get in there and make the online application. Some of the things that I'm telling you about the state, and this is one of my items in my 1, 2, 3, 4, is the new technology, the modern technology for the IRS is coming, people. The ability to file paper returns and to communicate with the IRS online is here. Well, I don't want to say is here. It's coming. We need to understand that the IRS is going to look at some of these states that have very progressive websites and mimic them. They should, at least the IRS should, imitate those processes for communicating. It ends up that many states have extremely progressive ways of communicating with the agency from the taxpayer standpoint of being able to see documents. You can log on to many state websites, which is what I'm wishing that the IRS will do, and pull down letters, pull down filed documents, look at filing, compliance. A lot of things for states will allow you to see everything that the state agents see. Okay, next item is my initial consulting agreement. This is after 20 years of being beaten up by attorneys, our own attorneys, and taxpayer attorneys to try to come up with some sort of initial consulting agreement. This is my initial consulting agreement. There's a 2-page secondary consulting agreement, which is referenced in the initial consulting agreement. Let me just say, people, that nothing is perfect. No contract that you have, unless it's 80 pages, is ironclad with this type of client base. It is what it is. This is sort of my field, if you want to call it. This is what I would have in front of me to hand write while I'm meeting with clients. Lots of my appointments take place face-to-face in offices that I do not have direct access to a printer. I know it's 2017 and I could have a printer here in my briefcase and all that other stuff when I'm traveling to New York or different cities. I just don't bother with it. I'd rather just handwrite this and have a staff member there make a copy of it for the taxpayer and myself. So this is my initial consulting agreement where I wrote non-refundable fee of $17.50. The taxpayer would sign it, handwrite name and sign it. I sign it, dated. Again, this is sort of not even a redacted copy. This is a made-up other copy. But I wrote down at the bottom here, flat fee of $17.50 for federal and state collections work through December 31st. Filing of prepared taxes, that's not preparing them, but filing them, mailing them in. Collections hold request, which a lot of clients don't know what that means, but it just means that I will contact the IRS and say, hey, can you hold off on collections? Give me 10 days, 30 days, 90 days, 160 days. And a New York State voluntary disclosure application and personal financial review. I was going to say statement, but I ran out of room down there. So that's page whatever. Let me look at this. Now the next, I should really have this right here in front of me too. My next thing is my credit card and direct debit form. That is page 7. This is simply something that we used in our office. It asks the basic questions that I need for running a credit card. 99% of the time, no client signs it at the X. The bottom half of it is for direct debit information, and actually the very bottom is totally out of date, so it doesn't really matter. The next big thing, which is huge, is I'm going to be adding the client to Canopy. So my procedures in my office are to utilize either the, you can certainly pull a PDF online and of a 2848, fill it in correctly, and send it, hand it, email it, use your client portal for secure, because the person's social security number is on it, your information is on it. You want to use a secure portal, US mail, hand it to the person so that they can fill in or sign the 2848. Remember that there's one for the husband, one for the wife. At this step is step number 4, add the client to Canopy, both the husband and wife. So you will need to get social security number. I like to have the date of birth because some states ask for it. Sometimes I actually had somebody from ACS recently ask me for a date of birth. Totally threw me off, but thank God I had it in. I already had a financial statement filled in, so I just looked at that tab. Full names, addresses, emails. So for this client software, and also just so you know, John and I talked about this a little bit, as far as what client management, CMS, client management software you use, whether it's Canopy, whether it's Pitbull, you obviously have to try these out yourself and see what you're comfortable with, the pricing, try it out, do the demo of the product. It's very important because once you get in and start using these software, you're really stuck with it. I used another software and then left it. It's not like converting from UltraTax to Pro Series. You can't just transfer everything over into the new software. You need to start from scratch, okay?
Hey, Mark, I got to ask a polling question real quick. I believe all of you that you'll be here and stay here, but sadly, the IRS, California, and NASBA don't believe you. So if you'd quickly answer the question, and Mark, you can keep speaking if you want.
Oh, I want to. I got to get my 50 minutes in. So the point is, what I didn't realize when I started with a different carrier is that I would be, if I wanted my history notes, I had to print them out by myself, going to each person, print out every individual history note. So my practice experience to you is choose one and stick with it. They will evolve with their client, with the client comments and suggestions on how to make the software better. All of them are very positively reactive to client concerns, customer concerns. You're the customer. If you have a problem, if you don't understand it, talk to them. Entering these things in, you will, but again, getting into either any of the software that's out there, you really have to get into the software. Roger software.
Mark, I'm sorry, 16 of you haven't voted. I need to close the poll in 30 seconds, so please vote if you're expecting credit. You have to answer the questions or we can't issue credit.
Ever. The point is that Roger software, the audit defense tax help software, ironically, my company name too, which we're not related, he does have the ability to fill in forms for the feds. He's bringing on the state. Roger's software is bringing a lot of things positively to help him compete with the bigger places. So the moral of the story is, if you don't want to spend $1,000 on CMS because you only have one client case a year, don't do it. Use Roger software and you can still create it, or just use them off the internet. So getting to my 2848, you have to fill in one for the husband, one for the wife, their full name. I strongly recommend that you start everything in your CMS, everything in your files, to include all middle initials, because the IRS will ask you, what is the taxpayer's full name? They mean, what's the initial? What's the middle initial? Timothy, blah, you know, J. Smith. His current address, regardless of what the IRS notices say, you want to have his current address. Oh, I'm moving next month. You want to have the most accurate address that you can. His social security number. EAs will ask me, well, he's a DBA. Do I put his DBA number / no? A power of attorney in general is supposed to have one number on there. I did receive information that you could do that. That's not me. I'm going to do 12848 for his 1040 for his income taxes. I'm going to do another 2848 for his business taxes. Have his business name there, the DBA name, the DBA EIN number, the unemployment or employment tax 940 periods. Next line, unemployment 940 periods. The next part of the form is your information over here. Number 2, this box here is a very important. Check to be sent copies of notices and communications right underneath your name is exceedingly important that you check that box. If you're doing an offer and compromise with the feds, they will not send you, they will negotiate the entire offer and compromise with you, but they won't send you via fax the answers as to what their findings were on the analysis of the financial statements, called an IET and an AET, the income expense table and the asset analysis table. They will not fax those to you if that box is not checked. Obviously, your CAF number, your PTIN, your phone numbers, etc. If there are additional people in your office who are working the file, I generally would have my other EAs and CPAs in my office on these other lines. If this EA who had referred me the case said that she had wanted to remain in the case, get IRS communications, and remain in the case, I know at the top of page 2 here, section 6, I think, that you can retain or revoke a prior power of attorney. My experience has been you just do a new 2848, put your name and then the other EA's name here if they've got 2 or 3 other people in their office who are also working the file for some reason. My experience has been that any new 2848, regardless of section 6 being filled in, will knock out the other 2848s. Even if you attach them, do everything that you're told to do on the instructions, it's still, from a practical matter, is better just fill everybody's name in there. Moving on. This part in the middle, number 3, is very important. A lot of the software will fill this in for you, so you don't have to do a lot of guesswork. I was talking to an EA this week who had put different words in here or in the tax form number because they didn't know if the person was a 1065. They were an LLC and they didn't know if they filed a 1065 or an 1120. They put in like all different types of tax form numbers. That will invalidate your POA. The IRS is not, this isn't a guesswork form. You must do income tax and know what the person's filing. Even if you have to wait a couple days in order to get that, you need to know what type of form they're filing. So in this case, it is income tax 1040. Now the client had told us, and the EA told us that the issues were 2011 through 2016. My rule of thumb is to put the year before, 2010, at least. If I've got a client, as usual, these clients, they don't have a clue, and they're going to say to me, oh, I think it was 2004, I might go 2001. What does it hurt? It doesn't hurt anything. Let's do this POA, because the worst thing you want to do is have to go back to the taxpayer and get another power of attorney because the taxpayer was ignorant of the years that he owed. I will put at least 1 year before the taxpayer told me that the issue started, and you can go up to 3 years, 2 from December 31st of the year you're in. So it's 2017, 12/31, you can go 12/31, 2019. And did I do that? Yes, I did do 2019 in this particular POA. Scrolling down, name, title, I will put NA or dashes here when it's a person. Obviously, if this were a DBA or a corporation, you would put owner under title, print name of taxpayer, Joe's Plumbing Service, Inc., whatever it might be. This date is very important. The relationship between 8/16/17 and when the CAF unit receives it via fax must be within 30 calendar days. I think one of our Colorado friends had an old POA that she was trying to push on the CAF unit and got told differently. But anyways, and the relationship between this 8/16 date and the date that I sign the 2848 is also vital. I cannot give, this is a POA that the taxpayer gives me. You cannot be predated. My date that I sign it must be on this date, 8/16, or after 8/16, but it must be within 45 days. Just keep the 30 days in your head, people. If the taxpayer hasn't paid you, don't have them date the 2848, or tell them don't sign the 2848 until you give me my money. I will tell clients all the time, our relationship in the beginning has two elements. I need the POA and payment. Don't give me one without the other. It's like a, half-baked case. I'm not calling the IRS because I haven't been paid. I'm not calling the IRS because I don't have a 2848. I'm not helping you because realistically. Obviously down here at the bottom, C is your designation. Licensing jurisdiction is IRS. And then your licensure, my 0060260-EA, then your signature, and again, we talked about the date. Not going to spend time on the New York State power of attorney because I can't, but that thing is, the New York State has two different types of power of attorney, one for access to the online stuff, and then the regular POA, which they can upload into the state website, which again, remember we used to have the DA, the disclosure authorization, where that was an instant electronic POA for the IRS. We didn't even have to upload anything. How about a consideration, the IRS? Why don't you let us upload as a PDF file that your computers can read a 2848? Give us 24 hours, POA's in. How much staffing at the CAF unit did you just knock out? Of course, the unions won't let that happen. But anyways, I digress. Here is my email dated on the 21st. Now the taxpayer, as a side note, the taxpayer, I date my 2848 as a practice. I date my 2848 the day I got paid. So I got paid on the 18th, Friday. So I guess I lied to you completely on this Wednesday thing. I date my 2848 the day that I was paid. Again, conscious, aware of when the taxpayer dates it. This is my email to the taxpayer. And I also CC'd the EA. I wrote and EA. I've attached the financial statement, the 433F, as well as my own internal questionnaire. I have that internal questionnaire here. I think I do. Yes, I do. The questions may seem redundant between the 433F and the questionnaire, but I found that the questions need to be asked from different standpoints in order to understand the flow of your income used to pay your personal bills. The form should be filled in as an after business profit. In other words, don't list any gross business income or business expenses. On a 433F, you don't have the space. Rather, what your future current average profit per month is and how that net profit is used to pay your average monthly household bills. I'm just trying to explain it on a layman's terms as I've done 100 million times. And on top of this isn't all perfect either. I have to be able to understand the flow of income and expenses in a current average month. Feel free to make notes, write all over the forms. These are drafts and do not go to the IRS. And then my sign off. This is my questionnaire, I call it. Again, it's not perfect. It's just the sum of me trying to gather as much information from the taxpayer as possible and ask it in 10 different ways. The client has signed the powers of attorney, has paid you, you've entered them into your client management software. Now here's the file. And this, here's this guy here. Here's a common file. Can't see myself here. Where am I? Okay, so this client, this is a basic file. Got your tabs here, and I'm going to go through the tabs on this piece of paper here. I just wanted to show you guys how I organize an envelope here. You've got power of attorney, and on top of that is the history note. That was the first piece of paper I showed you in this presentation. You've got, here is, I've redacted it, but here was the client's label. I actually type a label so that's in my label program, so I can, if I have to mail them things in the future, I can do it. Plus there's sometimes documents I want their name on. And then I kind of write on here, sometimes I will take my email, which was a summary to them, and cut it and tape it right here in the front of the file so that IRS calls you, your head is in the clouds, you got 16 other things to worry about. I give myself little cheat sheets on the face of the file as to where I'm heading with the client. This client is in IRS 2011 through 2016. We don't know what he owes. I wrote CNC then OIC question mark. So these tabs, power of attorney, behind there goes all your powers of attorney, signed and unsigned. Agreement tab is where I put my retainer agreements, signed, unsigned, copies of all the checks, payments, credit cards. Transcripts, those are your transcripts of account. 433A or B or the questionnaire and all the information that attaches to that 433A is going to be in there too. IRS correspondence tab, that's everything to and from the IRS. State tab, to and from. Correspondence tab, that's all the emails that I want to kill trees and put them in that tab. General info, that's going to be your client contact sheet so that you can refer back to that quickly without having to rustle through all the correspondence or parts of it. I might make a couple copies of the contact sheet and sprinkle it throughout the file just so I remember a starting point of where, when I came into the case, what it was like. And then the tax returns tab is obviously for any tax returns. I put, might have an extra tab that says employment tax returns as opposed to 1040s. So I just wanted, again, people, and this was Lily Tran had asked me about a real life case and how I work it. So sorry if this is basic for some people, but this is collections cases. And I just did a more detailed photograph of the screenshot of the tabs so you can have them. I'm not going to spend any time really on New York State because of the CE requirement. But I just wanted to show people how the IRS could do this. That's an interesting way of spinning it, right? I'm still doing federal work for the CE. The IRS could easily do this. I did this all in a matter of 5 minutes. Uploaded it, made my notes on it, but in here you'll see, and for some reason New York State's website, and I had another client today and everything got cut off also. But basically, this is how you do a voluntary disclosure program, whether it's state or in the future coming the IRS. But check this out. New York State already processed. Wait, let me scroll down here. New York State, within 4 business days, 3 business days, already processed the 2015 tax return. That's how quick a database can work when it's got the right RAM. And what I needed to do also for this client, which is tantamount to what I have to do with the feds, is I've got to immediately react and get a collection hold. This piece of paper right here, amount in protest, which I have circled and asterisked, is my proof that I got a collection hold for the state on his 2011. Now, scrolling down here to page 24.
Hey, Mark. Mark,
yes.
This is your 10-minute warning. You've got 11 minutes left. So
holy cow!
I told you. So people that want to go are going to go at 50 minutes, get the full credit. But Mark's going to continue to talk about all of his craziness, and he can do New York State issues if he wants after the 50 minutes. So in the next 10 minutes, plug in everything you need to get done as part of this part. All right?
Really? 10 minutes? All right. Well, part of this is, from a very personal standpoint, 200 of you are out there. A lot of you know me personally, probably most of you. But this is something that John and I have been talking about. This is what John and I have been talking about in a lot of ways, to make money, not to give free advice. So we are going to be putting it out there for what would you be willing to pay, because this is one case. I can do one of these every week. It could take me 3 hours to do this one case. So it will become we are going to be charging for this. It's the whole point. Daddy needs a new pair of shoes. So 10 minutes left. This notice, a CP59, the taxpayer brought into the office, very concerned about it. It's 4 years old, July 2013, looking for the 2011 tax return. We're filing it. There's nothing to do with this piece of paper, really. It's going to be documented. Taxpayer brought this in landscape instead of up and down. This is normally would raise my eyebrows. Notice of intent to levy a CP 504 for $18,000 on a return that we know he didn't file for 2012. So this, once the IRS goes over 6 months without taking collection action, they have to refresh that action. This is number, let's see here, number 14. We have the IRS CP 504 dated. If the IRS has not contacted the taxpayer within 6 months, they have to refresh with either another CP 504, an LT 11, or an LT 16. There are a lot of other forms the revenue officers use to refresh their 3194, 3174, to refresh their ability to levy and take collection action. This notice you also don't have to do anything for. It's a 1.5 years old. Really nothing to do immediately with this. I'm going to scroll through the state. Now, this is a note, a handwritten note the EA gave me, that this is what Tim was told to submit 2012. So this is stuff, again, that the EA is going to give you, whether I hand wrote this stuff, where to send the IRS reconsideration. So an SFR is done for businesses in Holtzville. And since this guy was small business, self-employed, his original 1040 will go. It's not a 1040X. The original 1040 will go to Holtzville. A 1040 for individual will go to Fresno. Different addresses are available on irs.gov. Here's all the returns. We don't need to go through them. What you need to go back to is page all the way. Where did I do my summary page, people? Did I do a summary page? Yes. Okay. We're looking at, sorry to scroll through your eyes here, but we can fast forward to the fact that the EA prepared all these tax returns. One of the things that I'm fairly good with doing, hasn't made me a hell of a lot of money around the water cooler, which is right behind me, but I can guesstimate with penalty and interest what a taxpayer is going to owe. So this sheet, which is page 41, this is how I do it. I'm sorry, down and dirty, this is how I do it. Roughly an unfiled tax return will double in 7 years. It's not science, it is just a rule of thumb I use. So this is very real of how I figure out the year, the IRS tax shown on the 1040 with P&I, that's my little scribbling. So I'm guessing that $2,707, and I know there's programs out there to calculate to the penny what it is, roughly $5,500, 5418 is going to become, give or take, 10,000, 10,200, 15,700. I go down the line here. I'm guesstimating that this guy is going to owe just over 68,000. Is this going to be perfect? No. I will put 10 bucks down on the table to say he's within $2,000 of 68,000. And when you're at those numbers, who cares? Again, the state numbers equally. Then this sheet is really this. I made 3 copies of the sheet when I was done with it. I also looked at his 2016 so I could estimate what his 1040 estimated payments would be, which is 25% of profit or 10% of gross. 10% of gross is a lot easier for people to remember because they don't know what the profit is. They, real estate agent gets a house sale and she gets 6,500 bucks. It's a lot easier to say 650 should go to the feds and X should go to the state than tell her 25% of profit, and then she's got to figure out what her expenses were year to date. When I got the transcripts of account, again, fast forwarding, I call practitioner priority line. They faxed me over 2010 through 2016. Lo and behold, let's look at the next page, page 42. Here's the 2010 1040. Return not present for this account. He didn't file 2010. These people never know. They never know. No return. There's the inquiry for non-filing of the tax. That's the letter that we received, whether one of these notice. And then still, I love this thing, a TC 598, a tax code, transaction code 598, return not filed. Thank you. So scrolling back here, I did send an email out Monday afternoon after I did this analysis to the EA and to the taxpayer, which said, 2010 is not filed, but it's past the 6 years. We're not going to file it. If you want to file it, if you want to file it back to 1904, please do. I will gladly take the money and prepare the tax return. In this case, the EA did. Well, she didn't. She would. It's her case. You don't rob. You don't bite the hand that feeds you. Certainly, since an EA will do, who referred to the client is going to do the work, the tax prep work. We're going to talk about it this week, Friday, about what we want to do with 2010, but it is my recommendation that we don't bother. Might save him another $5,500 that he can't pay anyways. I did see that the 2012 transcript shows 2 transaction codes of 670s. Those are payments in November of 2015 and another in March of 2016 of 2,000 each. So I'm saying instead of 68,000, he roughly owes 64K. And I drew an arrow up to taking the $4,000 out of 2012. There was also an estimated payment that was made, and the EA did have it. So this is when you're looking at these transcripts, I panicked a little bit, and I said, hey, when I looked at the tax return, the EA had, in fact, had knowledge of the $8,400, I think it was, of an estimated payment made on one of these years. So when I look at these transcripts, I got 3 minutes or so, when you look at the year that he does owe, which is 2012, well, there was the 2011 where we had $8,400. See, I have a brain here. I remember these numbers. The 2012 transcript. Okay, crazy. I hate the way they do 1040A. Why IRS, when you have all the letters of the alphabet, I think there's like 40 letters in the alphabet, why use A, which is a form we can use? Use 1040 SFR, 1040 D for the dodo didn't file. I don't know. Don't use an A. But here's his 2012. Remember, so you can use this stuff here. We've been talking about Facebook. Exemptions 1, he's single, AGI. Now I wrote in here, I will handwrite on my transcripts, the 1040 AGI is 26108. So we know darn well that this is still the SFR. Sorry to scroll down so quickly, people, but this says substitute returns a TC 150, substitute tax return filed by the IRS. That's the date the computer thought it was going to file it. As you scroll down, you'll see the actual SFR. The TC 290 is the additional tax assessed. 102615 starts the 10-year collection statute. Here's his tax of 13.5, which should, well, they don't always up top. They don't always coordinate all that stuff. It doesn't come up to the top. But look at this TC code. I wrote no, nope. 599 code, tax return secured. I don't know what that is. The taxpayer has no idea what it is. It's not reality. They did not get a tax return. These are the 2 payments that I referenced that the taxpayer must have made for some reason. Now this doesn't say payment with tax return. Oh, we got about 30 seconds here on this. So I wrote a note for this TC 971 issued notice, which one, because unlike this website where you could go and find out what notice the IRS sent out, the taxpayer were limited through e-services. So at this point, my synopsis on this brand new case, which literally is not even a week old, Number 15, when we go back to all the way to the start of this thing, all the way to page 1 is, come on. I got you down here. We were looking through the transcripts. I needed the transcripts ASAP, so I called practitioner priority line. If you do use Rogers Defender tax help software, if you put in this code, I think you get 10% off 1099 MD. It's Marc Dombrowski, that I'm a 1099 guy from him. I made a phone call. I'm going to put these history notes, number 16, I'm going to put these history notes in Canopy. I'm going to also write them in the file. I keep Mrs. Andrews' ID number, her fax number, because I had to send her the 2848. I requested the transcripts. We went through those transcripts very quickly just now. Number 18, I estimated the debt to be actually $64,000, and I updated the case history notes also about what I found in the transcript analysis. Upload and notify your client and the EA who referred the case. You're uploading the transcripts, your notes in some cases, notes that you don't want them to have, you don't have to put in there. But our number 21 is the game plan is, we don't want to talk about A and B, but we get the 1040s prepared, 11 through 16, get the client immediately compliant as best you can. It is your job to estimate, even though it's August, try to say, listen, what do you think you grossed this year? We should be putting together 10%. 98% of my clients do not have that money. So we're just gonna have to limp till January 1st, get 2017 filed ASAP and included in the 68,000, 64,000. Number E, call PPS for transcripts, a case status. I was told the case is in ACS. They said, would you like to be sent over there? And I said, at this point, no, I'll just call back. I had zero wait time for IRS, by the way, for PPS. Decide what 1040s to file and where, because again, are we gonna file 10? We found that out. The answer is no, but where do we file 11, 12, 13, 14? We get that financial statement to the taxpayer and review the financial statement for possible CNC. I don't have that financial statement yet, people, so I can't tell you the end of this case. I have 100 other cases over there that I could do this from start to finish with. But again, reacting to Lily's request to kind of take me from the beginning, that's where we are.
Hey, Mark,
So,
we're at 52 minutes. Just, I know a bunch of people want to go on to another webinar, so I'm going to launch this. To get your credit, I need you to answer the second question, and then if you need to go, you can go. Mark's going to keep speaking after this. So, Mark, let me ask you two things while we're chatting. One is, would you discuss with pricing, put pricing aside for a minute, because we all have our own how much I want to pay type mentality, or how much I would like to earn. But where do you come up with the number of hours on some of these cases? What would be an opening guess? And then they can plug in what they think their fee would be. Like that $1,750, did you think there's going to be 3 or 5 hours in this case before we go any further? Where did you come up with that number? I know, your mortgage is $1,750 a month and it was due the next day. But seriously, like how do you, is it just based on experience, or where are you coming up with hours for your guess?
based on experience. I unless it's an audit cases I do by the hour. Representation cases I do not. There are some cases that I'm pricing $750, the same as I did in 1994. Obviously that's wrong, but it works for the dynamic of my business model.
How many hours do you think some of these folks then should be thinking about up front? So a case like this, I'm going to sign it, do the research, get started. What do you think is a good number of hours to guess if you were new in the industry?
I can kind of say as far as what, and there's obviously there's a free consultation, and sometimes you back into that number if the person's signed up after 2 meetings and 15 emails. I have a client of that right now. I'm backing in. I'm backing up his hours to include some of the time in my mind. I'm not telling him, I'm not billing him per hour as part. I imagine that's unethical to tell him he's got a free conference or free consultation and then bill him for it later. I'm saying in my mind when I'm estimating, answer your question, when I'm estimating what money, how many hours it's going to be, I might go crazy. But you're looking at between you and staff. And again, there's obviously there's the number of let me put that back up there. Hey, how come I can't see myself now?
Because I got to share, dude. All right, let's hang that, and I'm gonna mute myself. So anyone who needs to go, you've earned the 1 CE. So at this point, Mark's gonna talk for a little bit more. I'm gonna scan through the questions while he's doing that. So if you have any other questions, post them in the question section, and we'll pop them up here for him. So I'm gonna mute now, dude.
Yes, chat along here. Get some questions to John, so that if we do have questions, there could be 100 of them. Like, where the hell am I going with this? The hours, I would say 10. I mean, just throwing it out there. Not how I priced this case. How many raw hours? If I'm looking at, and it's horrible to say, but obviously this is the real world of you're setting up the file. How long does that take? Doing typing the 2848s, all that other stuff. All that stuff has to be worked in. It's the real world. You can't these things because I am involved with a practice that is to the minute billing per client, no matter what you're doing. If you're there for if you build them for 8 hours of work and you were there for 9 with an hour for lunch, they want 8 hours of billing. And many people live in the real world like that. I don't for tax help for my practice. But the phone call to ACS or to PPS the other day, I actually logged in how many minutes that took. And I was on, they picked up, it was like 11:52 or 10:52. They picked up at 50. In 5 minutes, I was speaking to a person, and we were off the phone by 20 after. And in that time, I was obviously maybe answering some emails because they'll put you on hold. They have to get the 2848, look at it, different things like that. It's not like I wasn't multitasking, but there's half an hour for a phone call to PPS to get the transcripts. Reviewing the financial statement, typing the financial statement, depending on what Canopy will do for you. Various software will allow the taxpayer, like Canopy does, allow the taxpayer to put in their own assets and stuff. How many taxpayers know how to use Canopy software to properly do a 433? The answer is 0. I don't even know how to do it.
Hey, Mark, there's a question about Roger's website. Do you know the address for Roger's website?
The address is 10 Abbey Lane.
No, Roger Nemeth's website, Tax Help Software Network.
I know. Hold on a second.
I'll look it up and post it. So
yeah, you go to Audit Defense. I mean, just Google Roger Nemeth or Audit Defense and Roger Nemeth.
Tax Help Software Space Audit Detective, and that usually pulls it up. There's a couple of questions about using an EIN number with a single member LLC, and I want to comment that generally speaking, you should only be using an EIN on a single member LLC for payroll tax issues, not for income tax issues. So do you want to talk about that at all?
Okay. Keeping it simple, apples to apples. You're filling out a 2848 for what? The taxpayer owes on their 1040. I don't care how many corporations they have and K1s that are flowing down to that. That is not pertinent. Their Schedule C EIN number is not pertinent. What the IRS is collecting on, the assessment, is assessed against a Social Security number. So when you're filling in a 2848, even though the guy has a single member LLC, PLLC, whatever it is, you are going to be using the assessment-based identification number, which means you'll be using his Social Security number. Now, if that taxpayer, as I said before, that taxpayer also happens to have employment tax issues for that, go away. Uh-oh. Got to get rid of my, come on. If that person also happens to have employment tax issues, I personally fill in a second 2848, one that has the 1040 on it and another one that has the 941s with the name of the LLC, the EIN number of the LLC, PLLC, whatever it is, and then down in the middle, type of tax, unemployment, 941, your periods. Next line, unemployment, 940, periods.
So there's a question. Thank you, Mark. There's a question about what phone number you put for the taxpayer. Now, of course, there's a line of thought out there that despite telling our clients never speak to the IRS, tell them you're represented, don't violate your own rights, they do anyway. So this one particular practitioner we know asked the question, what is Mark's opinion on daytime phone number in part 1? So I know this particular practitioner puts her office number down as the client number. Now, I personally put down the actual client phone number, and in fact, when I'm asked by the IRS, do you have a current phone number, I do give it to them. But what do you think? What do you do?
All right, so when I'm filling in a 2848, I personally never, and I'm not telling you that you're wrong if you did in any way, shape, or form. I personally, to answer your question, I do not put a taxpayer's name or a phone number in there. I do not put my phone number in on a 2848. I do not. Now, if the taxpayer has sent me a 2848, I send them the 2848 to sign, they voluntarily fill in their phone number. They handwrite a phone number. If that first page 1 of the 2848 is legible, in other words, sometimes by the time I send it to them, they send it back, all this faxing and stuff way back when, it gets corrupted. I will not use that front page, and I will not put in their phone number. But if the taxpayer has self-filled in a phone number on any form, 433A, F, whatever it is, that they know I'm sending into the IRS as a final version that they signed, I will honor that, and I will keep their page 1 of the 2848 along with the page 2 that I have now signed, and I will submit their phone number, their daytime phone number. ACS called. I spoke to the IRS and the client, and they asked me for their daytime phone number. Number 1, it was practitioner priority line, so I'm pretty sure it's not going to go anywhere, but I did give them, which I rarely do. I generally say I don't have a good number. You don't want to lie to the IRS. So if I'm sitting there looking at the file and I've got it written, because remember I showed you people the front of the file, the label, I will handwrite the husband's phone number, wife's phone number, office manager's phone number, fax, whatever it is, I will handwrite that underneath the label of their typed written address. I'm staring at that, and some federal employee says, do you have a good current phone number? If I'm not rushed, if it's not like I have to get off that phone call, I will give it to them. This week, I gave it to a practitioner priority line. I gave them the cell phone number. I did not put it on this 1040, and I will not put it on a 433F unless the taxpayer fills it in, and then I will.
So what's your reply? You're on with ACS, and the agent's doing a compliance check and says, do you have a good daytime phone number? You would say no, or you would say... I'm at a whim probably 80% of the time, because we got to move on, because I've already been on the phone for 2 hours, I just say I don't. Gotcha. If I have one and it's staring me in the face, I mean, I was an altar boy for like 40 years, Boy Scout here, I will give them the number. If they ask me a direct question and it's right in front of my face, I'm not digging for it. How about this? I'm not going out on my way or digging for it. Or obviously if my taxpayer has said, there are some clients you will get, mostly from New York City, that will say, this is my cell phone number, my wife doesn't even have this number. I'm not giving it out to the IRS then, and I will note the file accordingly. You know, back to your Boy Scout comment, you also sold used cars at one point in your career.
6 months.
So there's a question that I know the answer to, but I'll let you address. I want you to address the larger question here. So someone asked, do listing years as XXX through YYY really work? Like, 2015 through 2020, does it really work? Now, I know that really works, as do you, if it's a 1040, a 1065. But what's the larger question here? How do you reply to the PPS's sister who says to you, that's wrong and I can't accept it, and you know that it is? What's the correct, gentle way to not, as you said, wait on hold for another hour?
All right, so you're saying you've got a valid POA that says that based on the instructions of the 2848, which is what the CAF unit uses as their Bible, and I'm saying that in the most respectful way of both parties, the IRS and the good Lord.
Well, this isn't CAF. You're talking to someone at the PPS's sister.
I understand, but that form that I'm giving to PPS is not their form. It's an important distinction. PPS should not be making judgment calls on something that they don't do. But respectfully, I obviously have to deal with the federal employee who's on the phone in front of me. I have to make them happy. I have to get them to do what I want them to do, which is just do this power of attorney so I can get status of the case, transcripts, ERPs, whatever they are. So the client, the PPS says to me, it's not a valid POA. I have to peel away the onion and see what part of it they don't like. Is the address not accurate? Is the taxpayer, is it a name mismatch? Is it an address mismatch? Is it a period mismatch? Why are you telling me this is an invalid POA? If it comes down to the periods, and I know it says a CAF unit compliant phrase of the word THROUGH, which is compliant to the CAF unit, which means the IRS should do it, what would I do? I honestly have never, ever had that happen to me, but I would say if you're telling me that it's invalid because of my wording in section 3, the extreme right-hand column, can you explain to me what I should be using there? Because I can fax you the instructions to the 2848 and see that the word through is there. We don't have all this time to argue with someone about it. I honestly would wait the hour on hold if I had to. I would say if we can't get past the first 30 seconds of this phone call, it's going to be downhill from there. So I would almost, what they say, drop back and punt. I would say thank you respectfully. I disagree. I think you might want to reference the 2840 instructions. I'm not asking for a supervisor for PPS to read a friggin' 2848. It's going to be, thank you, I'm just going to call back.
Fair enough. There's a comment here, maybe you misspoke or something was misunderstood, that the 3 years, the 3 forward years are, like for this year would be through 2020. That even though we don't file 2017 tax returns yet, 2017 is the current year. So you can file a power of attorney today through the year 2020. All
right, I would stand corrected and say yes. I do always forget whether we count this year or not. So whether we could go to 2019 or 2020. I generally, and that's another practice point. Do I want to this client, or not this client, because I did do it through 2019. There's some clients, some comeback clients who I don't want anything but, I will put that extra year based on what I want the relationship to be. I've got a third-time client coming back who I know has always beat me up on fees. He owes through 2016. I will not put 2018. I will put 2017 because we're in that year and I can't really resolve the case without having 17 on there. The IRS is going to ask me about his compliance and want to discuss that. I have to have that on the 2848. I am not putting 2018, 2019, 2020 on that 2848 because I want him to say no. Consultant agreement was referencing these years, these liabilities. The POA is only through 2017 when we engaged. Don't call me back 3 years from now and say, oh, you were on the POA for 1819. So there's some practice notes there too.
So you were talking before about paying 10% of the current year's gross in as an estimated payment. And I don't know if it was clear to everybody, because there's a couple of questions, that part of getting anybody through any program, whether it's an OIC, an installment agreement, is they've got to be quote unquote current on their obligations. And a revenue officer is generally going to look and see, are you making estimated payments? Now, I've had people tell me they don't have any money, and I've said to them, then put in $2,000 or $5,000, put in something, and I can argue your life stinks and you're trying or whatever else. If you put in zero, that's a hard argument, but pay something. Right. So the 10% is just your rule of thumb. Where's that coming from?
No, I had, and I mentioned that in the seminar, I looked at the 2016 Schedule C as a reference point. So on the 2016 Schedule C, and I didn't scan in all the pages for the purpose of I'm not redacting 50,000 pages. You guys don't want. It's already 56 pages. So I'm telling you that in the Schedule C, the dynamics, we're EAs. We know how to calculate this stuff. The EA who prepared 16 had an effective tax rate. When I took their bottom line taxes, put that number in the calculator, hit the division sign, put their gross number in, and hit enter, it came out to 10%. That's how I came up with that number. That's why I say a customized percentage. If you told that taxpayer, just take your 2016 liability, which was $8,400, $8,477, 8477 divided by 4. If I gave that same guy, which the software spits out 4 1040 ES coupons at 2119, that person's just going to look at me glassy-eyed, throw it in the garbage like all the other years of having that at their disposal.
Well, that's instead based on where you pick up your clients. That's why they're glassy-eyed. So you said most clients won't have money to make estimated payments. So limp along until you can get 2017 filed and add it to the amount owed. Question, what do you do in the meantime? Because isn't the IRS going to levy something in the meantime?
Okay, a valid question, and I remember when I was presenting in Washington State, this was very specific question, and it's the same answer I always give. Yes, somewhere around September, October, I start wincing when I sign up a new client who's $153,000, $400,000 Schedule C attorney or a financial planner, and I know darn well for 15 years they haven't made a single estimated payments. I'm not going to get them to come up with $50,000 to honor the September 15th, to honor the 4/15, 6/15, and 9/15. That's what the IRS wants to see. That's what it is my obligation to tell them that they should do, beg, borrow, steal to get that money. The reality is a lot of my clients don't have that money, and this is a practice point. You have to do everything you can to get them to limp into January, February, because really I say January 1st, but the reality is the software doesn't come out. We're not going to be able to file a return before January 25th or 20, whatever it's going to be anyways. So my answer to that question is your clients have created this scenario for you that you are in September of 2017 and they haven't made an estimated payment. You have to advise them on what they need to do to become compliant. You have to ask them to do it. You have to nurture them, but in the end, you can't reach in their pockets. You can't write checks for them that will bounce anyways. You have to do everything in your power that you're retained to do, file appeals, whatever it might be. But yes, a reality is that I spoke to a revenue officer today who's one of my most annoying revenue officers I deal with. Yesterday he called me for one simple question, and I'm looking at my phone because my voicemail system only allows 2-minute messages. He left me 2 voicemail messages that maxed out. He was talking off the tape, as they say, twice. He called back and left a second message to answer something very simple. That guy wants that $50,000, $50,260.10 on September 15th, no matter what. And he will levy, and I have to have my client be prepared to be levied. My point is, we didn't create this. We are trying to resolve it for the clients to our best ability. There are times when you cannot avoid a levy because of the hole that the person has dug themselves into. Do your best.
And I think, as enrolled agents, we suck at sales, and we're probably a little passive aggressive. And one of the concerns here is you need to be able to be Walter Cronkite, man, deliver bad news and go home and live with it. And sometimes Mark is correct that, you owe more than $100,000, you have assets, you have no cash, the levy is coming. A nice Tim Hortons thing there. The levy is coming. All right. So
winter is coming.
Question comes from a friend of ours who's an enrolled agent. I know that you've spent 20 years as not doing tax returns. I mean, mostly doing rep work. So, April 15th, other than getting your own return out, wasn't that big a deal. But so this person is asking, do you have a strict policy about taking rep cases during tax season? And I know your answer is no, because people have urgent problems and they pay a premium price. But what if I'm a guy with 500 tax clients and someone walks in with a collection issue March 10th? I can't possibly help them from my schedule. Can you refer people out? Can you split fees? You can't say to a revenue officer, gee, we can work on this large dollar collection case starting April 20th when I get back from vacation. What do you do if you're a practitioner and you want to help the client and you can't?
So I've since the 2011 filing season, I bought a tax practice where I myself generally do 350 returns between whenever we can start, January 25th and April 15th. That place shuts down on April 20th. We put sheets over the stuff. You know the place I'm talking about, John.
Yes,
And
massage parlor. Yeah, I do.
the former massage parlor that we took over and found out about. Why are there cameras in the ceilings? What are those? What's the lock on the door? That's a deadbolt on an interior door. So I have been shocked into owning a simultaneous tax practice where I am doing nights and weekends face-to-face returns, as well as every rep client in and every rep client that comes to the door has to be serviced, or I'm not making the mortgage payments. So I can answer this question from the reality of I do my best. Obviously, if I don't think I can service any client, whether it's a tax, it's almost the same client. It's the same question on a different level for somebody who walks in on we have policies September or April 7th. No more new clients. Everyone's going on extensions.
Mark,
What date
Mark,
in April?
you suck at sales too, apparently. So let me feed you in a little bit here. What did I do with my shoe designer who owed the better part of $1 million and had a large dollar collection case? What did I say to him during tax season?
I can't help you, but Marc Dombrowski can. Let's
That's
fit him
correct.
on the phone
I
right.
referred the work out, and we have an understanding that you don't touch his tax return. And it worked perfectly for me because he got all the touch he needed, and he didn't go to prison.
Correct. I do get a lot of referrals during tax season because of exact that reason. And yes, even though I do have an active return prep practice, I will absolutely make the time, because what am I making off one of my $100 tax returns, John?
Right.
$30.
But also too, it gives us, it allows the person who is running a tax practice not to disrupt their practice, get the client the service they need. And let's face it too, you take a big collection case and you push it off with an RO, you can end up getting yourself sued if the case goes south while you weren't paying attention. Someone asked, why did you send a 433F on Tim's case instead of a 433A, and how would someone know which to use when?
I sent a 433F because he had talked to ACS and was given a deadline. Actually, let me back up. I know he said he talked to ACS. I had a hint that the case was in ACS, and I prefer the 433F for its page 2, the revised 433F. There was a revision, I think, in April of 2017, where the 433F has a much better way of analyzing a taxpayer's flow of income and expenses out. So my answer is A, you have to give the client the form of the entity at the IRS that is negotiating with them. ACS is a 433F, and RO is a 433A. So yes, if he said, I've got an RO knocking on my door, I've talked to them, they've levied bank accounts, I'm going to give him a 433A because we got to get going on that right away. I sent the F because he was dealing with ACS, and I like the F combined with my questionnaire. I actually prefer, if the client is on the ball, I almost prefer to give them a 433A OIC, because that's a really nice form for looking at the flow of income and expenses. The caveat to a practitioner is a client will come back to you and say, I thought we did an offer and compromise. I filled in an IRS offer and compromise financial statement. Didn't we do an offer? I constantly have to remind people, and please take this as a practice note, fellow tax pros. Clients think that you do an offer and compromise. Did they sign a 656? No. Do they know what a 656 is? No. Did you say, oh, I submitted your 433A and your offer and compromise next week? No, that conversation never happened. I've had successive clients assume that I did an offer and compromise on cases that were nowhere near. The guy hasn't even filed the last. We're trying to fight him to get his 2016 return together, or his 15 return that's not compliant. they're still, what's my status on the offer in compromise? We never submitted one. So not sending a 433A OIC form is almost protectionist, cover my butt, even though I prefer that form, because I don't want to give the client the impression that we in fact are doing or have done an offer in compromise.
So we didn't put the glossary of terms in with this, and we probably should have for people, newer folks. So there's a question, what is an SFR? If you want to.
An SFR is a substitute for return. It is under 6020B of the IRC. 6020 in a little parens, little baby b, is what gives the IRS the authority to take a taxpayer's income documents that have been demonstrated to the IRS, the W-2s, the 1099 miscellaneouses, 1099 interest, dividends, to compile all that information and have a computer generate a tax return that is either only single or married filing separate. They cannot join two people. It cannot be head of house. It's never going to be head of household because they're not giving you that assumption. And it's not going to be married filing joint because by law they don't have the right to join two people because nobody signs this SFR. An SFR is an assessment made against a taxpayer for income reported to the IRS.
So so Roger's web address, about 10 people said taxhelpsoftware.com. So taxhelpsoftware.com, and under shameless commerce, you can use the discount code MD for Marc Dombrowski 1099.
Yeah, it's either 1099 MD or MD 1099. I can tell you, but
right,
I'd have to use my. If John has me secured to this chair.
Mark does not make any money off this. A question two is, why do you use TaxHelp versus Canopy?
Well,
wait, let me say one thing. Roger's an enrolled agent like we are and a heck of a nice guy. And when you go to a trade show, you talk to Roger or occasionally his father. Canopy is a venture fund. It's good software, but it is a venture funded company. I don't even know who owns it anymore. But obviously, venture funds own it. And ultimately, what happens to a venture funded company? They have an exit strategy, which is to go public or get bought. So just like Phil Drake owns Drake Software and swears he's never going to sell the company, and 40 years later he hasn't, I think Roger's kind of the same way. But why that over one over the other?
So I really have to, because I have a lot of friends that are EAs that are pit bull people, that are pit bull organizers in the software, and I love them. I liked pit bull when I had it. I actually I didn't leave Pitbull because I was unhappy with the software. I left Pitbull because I was doing different things in my practice last summer that I had some issues, and I ended up not renewing. So I didn't dump Pitbull. I didn't renew because I wasn't using any software for a period of time. So that's in fairness to Pitbull. Also, as I will explain, Pitbull and Canopy evolve. So the Pitbull that I left in August of 2016 is not the Pitbull that you would sign up for today. It's more responsive to clients' needs. It's added on stuff. It's done things. I can't even speak about Pitbull because I don't know how many awesome things that they've brought to the table since I left. It's exponential, the amount of advances that both Canopy and Pitbull have brought to the table to honor their clients' things. What I do recommend to people is you do the demo of both of those softwares and work it and look how it's going to make money for you, make you more efficient to make more money in representation. Why the difference between, I will always, regardless of what I use, I will always have Roger's software because I feel that it gives a more comprehensive reporting and 10-year statute analysis, refund statute analysis. Roger is a god when it comes to his ability to take his knowledge of transcripts and how they interact to the IRS and put that, very importantly, you can be a god, you can have all the knowledge in the world and not be able to generate software that has a logistics to it to make that happen. So yes, I do like Canopy's. I will always, in Canopy, there's a whole transcript whole transcript reporting system. Rogers is superior to that. I tell Canopy that all the time. I have meetings with Canopy on how they can make it more. And I always go, you know, Roger does it that way, so I know you guys can. So I try to, because as a user of Canopy, I want them to make it better every day. So it helps me in a selfish way. I'm a customer. I want the lollipop to taste the way I want a lollipop to taste. So I will tell them how to make it more like I'm also advising Roger on what I think he should do with his little tweaks he should do with his software. So I like Roger's transcript analysis, reporting format for transcripts alone. But I, as a person who has history notes and documents that I need to reference later from anywhere in the world, whether I'm on vacation or whatever, I will use Canopy because Roger just doesn't do that. So yes, if Roger for some reason, if Canopy well, I love Roger, so I'm never not going to have his software, period.
Hey, so a friend of ours from Oregon, who we happened to see at NCPI, if that tells you who it was, asks, how many months do you use when calculating a self-employed client's average profit per month for the client financial statement? And then do you use the current year numbers or the prior year numbers?
Darn good question. It depends. It depends on what month I'm in. So my rule of thumb is this. If we're in January, February, March, I'm going to use last year's numbers. Somewhere around May, I start asking the taxpayer, do you have your 2017 numbers? And a lot of these people, like this guy, hasn't filed for 6, 7, 8 years. They have their head in the clouds. So they don't know what their current profit is. So there's sometimes I have to say, stop. Forget 16, 15 for right now. We have to stop these levies right now. We have to do some certain things. Take a piece of paper, call your trucking company and ask them what your year-to-date gross is. Let's look at your bank statements. Just take 2 hours and go through, stop what you're doing and give me a rough draft profit and loss statement for 2017. So my answer is it depends on what part of the year I'm in. January, February, March. Obviously, we're trying to use last year's numbers. We're in April. The guy has no idea what his January through March gross or net income is, but his EA just gave him his 2016 Schedule C. What do you think I'm going to use? His 2016 Schedule C. Unless he tells me I lost a huge client in February. So this is part of the depends.
I won't make a depends joke here.
Yeah, it flashed in my brain, but
so there's a couple of questions about withdrawing powers of attorney. So first, a couple of people asked how to do it. You write withdraw on the top and you sign it and fax it into the CAF unit. No,
wrong answer.
What do you do?
Wrong answer.
What do you do?
Okay, because and I've been very clear about this in some of the seminars.
Let me give you all three parts so you can plug it all into your conversation. So that's item one, is withdrawing. Item two is, are you diligent about withdrawing when you need to? Item three is more of a disengagement question. When I'm not getting along with the client or the client disappears, this person asks about withdrawing the POA. I want you to add in about how you disengage yourself without getting yourself sued. So go ahead.
All right. So I am a creature of experience, as we all are, and I have been taught by the CAF unit on how to withdraw a power of attorney through successive unsuccessful withdrawing of powers of attorney. Revenue officers will tell you, and here's some disconnect again, the CAF unit control, I don't care what an RO tells you, an offering compromise specialist, an appeals officer who's been working at the IRS for 40 years. I don't care what they tell you. It's not reality. The reality is what the CAF unit people tell you because they work there. It is not responsible for an ACS person to tell a taxpayer you should do an offering compromise, because then that person walks in the door and says, no, the IRS told me I should do an offering compromise. ROs tell the clients, write the word, or the EAs, the practitioner, write the word revoke across the top of it, and fax it over to me. And that works for the RO's case file alone, and that's it. That revenue officer faxes the revocation, the withdrawal, to the CAF unit. You get a letter from the CAF unit that says, hey, this wasn't signed. It's not a valid withdrawal. So what do I do? Oh, there's also, you can, through Freedom of Information Act, you can get a list of all the powers of attorney out there. As I've told many times, that 1,052 pages, I have it in storage right here. They say just go on to that, cross off the ones you want to keep, write withdraw, and I forget whether you're crossing off the ones that say withdraw. Either way, it doesn't work. So I'll tell you, it doesn't. What I'm telling you doesn't work anyway.
You cross out the ones you want to keep.
Yeah, you cross off the ones you want to keep, and then you write withdraw. I had an intern, my nephew, who worked here for 18 months, and pretty much downtime every day he did this. Out of the 250 POAs I revoked, maybe 10, not even like 200, not even like 50% of them went through with that method. I totally wasted all of his man hours. It was ridiculous. So what does the IRS use as a withdrawal? It is a simple statement. Hold on 1 minute, I will get one, because I can't print. I don't think I can print here, right? I can't. No, I can't, like, from my computer. Hold on.
What are you looking to do, dude?
I'm looking to access. I'm looking to access in my computer, and I can print one out or bring it up on my screen, a withdrawal form. But I don't want everyone to see.
We can, if you send it to me, we can email that out to everybody through Eventbrite. So
okay.
So don't waste
there is
your
a
time doing
document.
that.
There is a document. Very simple. It simply says withdrawal of power of attorney, taxpayer's name, not even address, name, social security number, type of tax, periods. I hereby request that you withdraw this power of attorney. It must be signed and dated, and one piece of paper for each person on the power of attorney. A lot of my POAs had three of my partner and an associate EA on every power of attorney. And husband and wife, I will put on one generally. I will fax that along with the recent CP 504 or CP 521. Those are the payment vouchers that come in every month for all these clients I've got installment agreements on. I'll put that in there just so there's no problem. They can see all the information. And so it must be signed and dated within 30 days of when you sent the fax, by the way. Those rules still apply. So you want to, it's not a form. It is simply a letter, a couple pages. I'm sorry, because the CAF unit annoys the living daylights out of me. I have 4 minutes on hold for PPS or ACS, and I'll trade that any day. I am cursed when it comes to the CAF unit. So they have schooled me on how to withdraw a power of attorney, and even then, it doesn't work.
Did you say caffeine curses you? Oh, CAF unit. Those caffeine.
Caffeine, yes. Okay, so withdraw, and then the second question was what?
The client who disappears. How do we disengage? How do you disengage from? Well, let's say that I've been calling and calling and calling, and the guy just doesn't call me back.
Right. So our obligation is to use the last contact information that we have. We are human, and that is it. We cannot make up anything. We cannot try to start Googling the guy's name. If his last known address, if you mail a letter to him saying, and the letter does not have to be fancy, it can just say, you have not responded to my last 1, 2, 3 phone calls, whatever your reality is, my 3 emails, my 2 phone calls and 1 email, 1 letter. I am withdrawing my power of attorney from the IRS, and I'm disengaging from our engagement. Please see engagement, whatever, letter dated, whatever. You still owe me, and I always, in our office, generally that disengagement letter has a, don't want to forget that the guy still owes you money. A lot of times they do, because no matter what you do, you got the retainer. They're paying you every month, and they're like 45 days late on July, and you're still working the case. The OIC person calls you. You're going to work the case. And then 2 months later, it ends up he didn't pay you for July, August, September. When you disengage, you got a bill there. So your phone call to the I'm not going to tell you that some attorney won't get in your face anyways. All I'm telling you is what I practice, and that is the last known address, last known email address, last known phone number. If I've called and left a message, I've sent an email, and I've sent a letter, and I've withdrawn it from the CAF unit, I'm going to say magical words. How could somebody blame me? I can stand in front of a judge and say, what did you want me to do? What did you want me to do? So that's the answer for engagement, is last known contact information. Heck, it's what the IRS uses. Last address on the last filed 1040 is all they have to go off of. Sometimes they will upload. They have these investigators that look at the W-2s, the most recent W-2s that were filed, and trying to find track a taxpayer down. But other than that, all they're legally obligated to do is mail a letter, like a stat notice, which is a very legal document, final notice intent to levy. All they have to go is the last filed return. Even though that was 15 years ago for some of these clients, and it's way not a correct address, they can sit in front of the court and say, hey, we mailed that letter to the last known address and the last filed return, and be exonerated. Does that apply to us? What's that?
Do you send that certified mail? I'm
No.
ending our relationship letter?
It depends. If the guy paid me $750, it's not going out certified. If the guy pays me $2,500 a month, it's going out certified. So it just depends on the how much money the person has paid you is tantamount to how much they're going to come after you for. And in 24 years, I've never had what?
From a best practices standpoint, your fees are typically fully earned once paid?
Yes.
Okay, so the $1,750 guy, whether he follows through or not, he's paid you $1,750.
Yeah, I'm not giving that money back.
Yeah, you didn't mean it that way. And there's no such thing as a credit either. Like I show up 3 years later, well, man, I gave you $1,750. Can't we continue? I think that says why you want to disengage.
And there's extenuating circumstances in every case, John. So that the person does develop, like I know I've got one case in my inventory right now. I've written on the front file. You know, I told you I write on the front of the file. Some of my cheat sheet is, I owe this guy one financial analysis. I feel that in my heart. Okay, it could be another year because he did. It took him 2 years to come back, and again he did a financial statement. He paid me a good amount of money, and I owe him a financial statement, even though that money was literally 5 years ago. Okay, so now our third question, or did I answer that?
I think you hit it. So from a friend of ours in Minnesota, have you ever requested the OIC officer send you their printout from what they enter into the software to compare with the 433A you submitted? That sounds like a FOIA. Every time. Every time.
I mentioned that's an AET and an IET. So a AET is asset income table, and then the IET is the income expense table every time, unless we offered $8,000. They say they agree with it. You shut your mouth and you say, okay, please issue, we've accepted your IRS. We don't need the AET or the IET. We just shut your mouth and let them issue the letter that says we've accepted your offer pending the payment of the rest of the offer terms.
Someone is reminding us that CFS Tax Tools has a withdrawal form built in, and it does. So if you're using that product and did your power of attorney in it, you already have the data in there, so you could produce the withdrawal letter quite easily. For those of you, it's $199 a year.
Signed and dated, and very important that it's signed and dated by the rep. And the rep's name, oh, by the way, I put my name and CAF number on that letter. I forgot that.
Someone asked what fax number to withdraw. What fax number do they send the withdrawal to? And the answer is the same CAF number they sent the 2848 to, depending if the client is east or west of the Mississippi.
Correct. Same CAF unit. Incoming or outgoing.
This lady can't hear enough of your voice, apparently. If a client goes into non-collectible status, can Mark discuss timelines the IRS has to act, or does it stay the timeline? I think she's confusing two things. One, how long is CNC and what happens in the future? Then the second thing is she might be confusing offer and compromise where you toll the statute. So you want to address both of them while you're at it?
So a CNC,
if someone goes into CNC, what's the length of time? And then the second thing is, does that affect the statute at all while you're in CNC? CNC is currently not collectible, by the way, for acronym junkies.
Get your head out of my screen, John. Okay. So, oh, you almost gave me the finger.
I almost
You know, we thought I would screw up, you know, this visual. John didn't, you know, the video was my idea. I insisted on it. John obviously produced this, and thank you, God, for John as a friend and a colleague. Big round of applause for little Johnny. I say little because I've seen, but no, John produced this. I insisted on the video, and we thought I would screw it up. You know, I would be here itching my nose or something. And anyways, CNC has no real timeline. I know that many people, the IRS, have told me, oh, this is a 2-year CNC. This is a 1-year CNC. The proof is in the pudding. I've had CNCs that come out of an appeals officer. So I file a CDP, a collection due process hearing, and file an appeal. Let's just call it an appeal. I negotiate a financial statement with an appeals officer. They put it into a CNC status. That should be rock solid, right? 9 months later, it comes back out into collections. Do I think that's reality, or do I think that that's realistic? No. Responsible of the IRS? No. No, from a standpoint, they just had someone who makes $125,000 a year analyze my financial statement and say that it's an uncollectible. 9 months later, the person's certainly still uncollectible. Do I cry and stamp my foot to an ACS rep who says, I don't care what you did 9 months ago, Mr. Dombrowski. My job is to secure a financial statement and see if the person's CNC today. So CNCs don't really have a statutory life. In reality, I have a client right now who's working on 8 years. I did a financial statement for him. He came back, and I said, we don't do anything. You're still CNC. This is going to fall off in the next 8 months off the 10-year statute. Do not do anything. I advise the client, if he wants to pay his federal obligations, he can feel free to do so. You never want to tell the client that they shouldn't pay the IRS. You tell them this is what can happen if you do or you don't. If you have the money, you can pay if you wish. You hired me to give you the advice. The advice is, if you do nothing, you are currently uncollectible right now. And by the way, you gave me a financial statement and the guy's still currently uncollectible. I'm not going to go to the IRS and tell him, here's a new financial statement. The guy's still currently uncollectible. There are 2 types of uncollectible that we've been told internally from the IRS, sort of a more of a rock solid CNC, which is what my guy is in, obviously, with the 7-8 years. Most run-of-the-mill CNC, a regular, and I don't want to use the terms, it's tongue-in-cheek, street talk. A regular CNC, when I go into a CNC, for the most part, and I might have practitioners that disagree with me in a very respectful way, I'm not going to assume anything other than a standard CNC. The guy's uncollectible right now. How long do I tell clients? I say a year to 3 years. That's what I tell my clients. There are thresholds, which my client didn't, and because I applied these thresholds to my 8-year guy. It used to be $34,000, and we're talking in the 90s. It is now up to $44,000 that if the taxpayer files a return that has an AGI greater than $44,000, they're supposed to come out of CNC status. That guy has been making over 80 grand a year for the single guy at the CNC level. There's 8 years. So obviously that doesn't work every time. I've had a lot of other circumstances, because $44,000 is not a lot of money in 2017. So that AGI is supposed to be a threshold to kick somebody out of a CNC. If they don't file their current year, they're not supposed to stay in CNC. I've seen that time and time again get violated and nothing happens. The person's CNC for years. If they file a new return and fail to pay, just like in an installment agreement, just like in an offer in compromise within the 5 years after it was accepted, that's supposed to kick them out of CNC, and I've seen that not trigger a CNC come out. So what I tell my clients is 1 to 3 years, that I'm not guaranteeing anything other than I will negotiate this financial statement and humbly request that they're a hardship. And then the second part of it was the offering compromise. So a CNC negotiation does not extend the statute itself. There are some laws about it. Actually, Roger had a webinar about 2 weeks ago that went in depth on that, and it was an awesome collection statute thing. The reality is that a CNC does not extend the statute. Certainly not while you're in it. My guy who has 8 years that he's in the CNC status has not extended his statute for 8 years. Period. Does not toll. That's the legal term, is tolling the 10-year statute, stopping it, freezing it. The offer in compromise does toll it while you're in the offer, including appeals, plus 30 days. So from the moment your offer, your 656 is deemed processable by the IRS until it is either rejected, returned, accepted, the 10-year statute is tolled plus 30 days.
So there's a couple. All right. So there's a couple of questions about. Oh man. The 6-year rules. So, and I think there's some confusion here. So one question's coming in is, under what circumstances would you go back further than 6 years? I was told at NTPI that I might file more than 6 because it could be helpful for an OIC for a high income person by increasing their tax debt. Interesting strategy. But hang on. And then a couple of other people are like, the 20-year non-filer walks in. Why are you doing 6 years? So you want to address that. And then sometimes it's 6 and the current, and sometimes it's 6 including the current. So you want to mention that too?
Yeah, it doesn't. It really depends on. It is case by case. The practitioner who's going to file past 6 years for the purpose of increasing the amount of liabilities in order to increase the well, hold on one second here. I do have, because we had this time allotted for an hour, so just give me, I'm going to take a 30-second water break here, and I have someone downstairs who wants to talk to me. So hold on 1 minute, because this is a complicated answer.
Buddy.
All right, hold the line.
I guess this should have been more than a 1 hour webinar. If you have questions, pop up the questions. We'll keep him going on the line. All of this, of course, is being recorded. And you know, if someone is non-collectible or in an installment agreement, you get that annual statement every June that indicates how much they owe. So, of course, you should warn people, but they forget about this and they panic that they got a bill, and it's really not a bill, and it says this is not a bill. Dead time, man. I should put on a record. All sorts of more questions coming in. Thank you. How can we get a record of the webinar? Are you looking for a 45 record? The recording will be posted. I need to convert the data. It takes about an hour or so for the data to convert to an MP4 format. I'll load it up to Vimeo. I have a professional subscription to Vimeo, and then I will make the link available so that you can listen to it all you want. So
that's
Mark,
a CP.
Go back to the 6-year rule for us.
And so the notice that comes in, it's not every June, John. It was supposed to be every fall, and it does basically go spring and fall because a bunch of clients get it. I got a whole mess the other day. CP71s, and their CP171s is the business taxpayer. CP71s are the CNC notices. But anyways, so the practitioner who's going to be filing more tax returns for the purpose of adding debt to make it an insurmountable amount, that is a strategy that is aggressive in a positive way. If you're asking the question, you shouldn't be doing that kind of offer. How about that? In other words, that's a high level, very tricky, aggressive way of doing it. And I imagine that if it's the only offer you do this decade, you shouldn't be doing that kind of an offer. You should ask for help on that. So my answer is it way depends. I probably have done that once in years. So an offer in compromise with that kind of aggressive thing is for a high level, very experienced OIC rep. Not really for me to be answering, yeah, go ahead and do it. I do it all the time. I don't, and not, it just hasn't come up. How about that? So the policy statement, and I think since we've got, as practitioners, as return prep people, we've got the 3 years and 6 years. So the IRS can audit a return 3 years after it's filed to the filing date plus extension, blah, blah, blah. They can go back 6 years. They can go back forever if it's fraud. I'll talk about that. They can go back 6 years. Congress allows them to go back 6 years if they have not identified more than 25% of their income. I think that the policy statement, my personal experience, nothing that any of the IRS has confirmed what I'm about to say. I think that the policy statement that the IRS has, that is in fact in writing, that says it directs a revenue officer or ACS or an offering compromised person, there's no differentiation here, to look at the last 6 years, secure the last 6 years. I feel that they're piggybacking off the statute that allows the IRS to go back the 6 years for purposes of an audit. They're using that same statute as a guide to form a policy that if a revenue officer knocks on the guy's door and he hasn't filed in 25 years, just secure the last 6. That policy is still honored by OIC, installment agreement, ACS, or revenue officers to this day. Last week, I spoke to 2 OIC people and said that I was giving seminars, not last week, God, the weeks, last month. I was giving a bunch of seminars, and I said, well, we're done with this conversation. Let me just ask you, there's some rumor on the tax practitioner internet that all of a sudden OICs are requesting to go back appropriate years, all the required years. And the answer was, in both cases, from 2 different offering compromise units, yeah, the answer is required is 6. We're not asking for any more. There's no change to the procedures that were already in things. So 6 years is when they haven't filed anything. What time do I go past that? If there are substitute for returns. So client comes upon you and he hasn't filed for 15 years, and the IRS did 07 and 08 SFRs. I would advise that person to do 16 through 11 and the 2 years that were SFRs, to file those original returns the best you can with the information available, all that other gobbledygook. So there are times when I will go back and I will skip, and it's right in the IRS's face. They didn't file 2009 and 10, let's say, and you filed 7 and 8, and you didn't file 9 and 10, and then you filed 11 through 16, and you mailed it into one revenue officer. It's right in their face, and they still don't say anything but thank you. You're in compliance now. Let's move on to the installment agreement. And as I tell practitioners, the proof is in the pudding. If you send in 6 years and ACS says they want the oldest year and they're still on your tail about it, you got to file the 7th year, period. If they don't, you're not supposed to go ask for it. Hey, don't you want 2010? Don't you want 09? And even then, an ACS rep is going to 99% of the time tell you, no, we don't want it. It's not, we don't want it right now. So that's the time when I would go back past the 6 years, would be if there are substitute for returns filed that I want to refute.
Hey, how about a business return? I have a partnership that hasn't filed in at least 11 years, and they darkened my doorstep this week because somebody wants their K1. What do we have to do there, and why? Keeping in mind for the folks at home, there's a $195 per partner per month civil penalty for late returns that can be expunged under Revenue Procedure 8430 if it's 10 or less partners. But go ahead, Mark.
Business returns different. You have to, for purposes of depreciation, for purposes of a lot of different things, in general, especially corporations, I know it's a no-brainer. 1065 or 1120s, you got to file all those returns back to 1904. That's my, again, if a practitioner has a different opinion on that or a different experience, I welcome that experience. My rule of thumb is that if it is a corporation, it's got to file. Unfortunately, doing business in the state of New York is very clear that they want extreme number of returns to be filed. So I'm doing it for New York anyways. I might as well file the feds.
New York, New York won't let you do a voluntary dissolution unless you've filed every return. And
Yeah.
you'll, just for everybody at home, so you have somebody form a corporation in December of 1965, and they start filing the returns in 1966. You'll get a request that says, we need to part your return for 1965. Anyway.
Yeah, it's insanity. I just had New York State tell me, and incorrectly so. I've had two major sales tax cases in New York that I have come out on top. Yesterday, the guy got his sales tax certificate, and I was saying to my wife last night, and there's just not that many people who could have worked that case. Without the patience, there were 5 different major conversations with New York State where I'm getting different information from the state as to what would bring them into compliance. The guy had 4 closed corporations and wanted to do business again and get a sales tax authority. The other case had 6 bars that he closed down and owed tons of money to the state. And he got me so frustrated, I said to him, you are the reason, you are the person who has this is criminal activity. You are the person for this, the reason for this statute, why they make you set up an installment agreement to pay back the other 6 bars that you closed, because they want you to stop doing business. Yes, you are right. You are a small business person in New York State who the state wants to shut down, and I want them to shut you down. But since you've paid me a retainer, let's see if we can get your sales tax reactivated and get a 6th certificate, and I did it. Because he set up 6 installment agreements and had to file for defunct corporations. Again, we digress from the federal here in crying about our New York State woes. But hey, it was a retainer to me, so what am I crying about?
So there's a question here that I think is something you're going to have to follow up on individually with her. But I have a case for representation. Client is a construction S Corp, owes $600,000 in civil penalties. Now, to get there, in my mind, you have to have had, what, $6 million worth of W-2s you didn't mail in? Anyway.
Well, yeah, I was going to say, is it civil penalties against the corporation? Because there's a lot of intermingling. Somebody says civil penalty, they don't know.
But I'm just saying the numbers have to be astronomical to get a civil penalty that big, unless they had civil penalty related to foreign corporations or foreign assets. IRS issued a lien against the business. I would hope so. The practitioner appealed it to get the lien released because it is compromising the business's ability to conduct business. That's the idea. The IRS won't do it since the amount is so large. What are this individual's options, obviously, other than an OIC or an installment agreement? But go ahead.
You know, this is a brick wall that's out there for a reason. You have to commit, and the law is on the IRS's side on this one. We have to prove that it is in the best interest of the government for the purposes of collecting, by the way. It is in the best interest of the government. You have to prove to the government that it is in the best interest of the government that releasing that lien would facilitate collection. That's a tough hill to climb in this case. Obviously, I don't know anything about, other than the factoids given about other events that may have occurred. But the moral of the story is, I would never take that retainer and say, I guarantee you I can get this lien released. I wouldn't. Again, I would say, listen, here's what I'm going to be doing. I'm going to tell you that it's an uphill battle. I actually will say, and again, the worst businessman in the world, I will say, I will not guarantee that I will get this lien released. In fact, I think that you have a shot here, but it might be 10% at getting this lien released. I'd really have to think on that, on some case law and some other things that I might have stumbled upon in my practice that would be things to help us in this situation. But again, the lien being released, I had an appeals officer coach me or school me in this, which is actually very much hopefully I don't disconnect anything. Let me just 30 seconds. Guy signs up with me. He's a financial stockbroker. He was escorted off the stock trading floor and given a letter that says, you're fired. We found out you had a federal tax lien. As soon as you get that lien released, we'll give you back your $180,000 a year job. He owed the IRS 100 grand. He comes to my office and says, I've got a letter that says if the IRS releases the lien, I can pay them $1,500 a month. Let's set up the payment plan. I set up the payment plan. I appeal the lien filing. Appeals officer says to me, I'm not going to release the lien. Taxpayer advocate, actually out of Boston, and this is the only time I've ever had a taxpayer advocate who's supposed to be really the nice old lady helping you find missing tax returns. They really don't have a lot of power. IRS taxpayer advocate says to me, maybe it's time he gets a new career. I'm like, you're not, I'll never forget those words. Maybe it's time for him to get a new career. You're supposed to say, no, I'm sorry, I couldn't motivate the IRS, whatever, placate me. The appeals officer says to me, Mr. Dombrowski, the reason why he was escorted off the stockroom floor is that so that the Miller, the Merrill Lynch stockholders are told by Merrill Lynch that they don't have cheats on their payroll, that someone's handling their money who's not bankrupt, who's not an alcoholic, who's not in tax debt. If I release this lien, I am insinuating to the shareholders of Merrill Lynch that he does not owe the money. That is not a fact. So, and if you think of it from that standpoint, the lien exists so that the shareholders of that entity who have given their trust to Merrill Lynch that they don't have, for reasons that Merrill Lynch has found that people defraud their clients, bankrupt, tax debts, alcoholism, drug addictions, those people who steal from their clients, they want whittled out of their employ. I am not going to be party to helping a non-reality, even though that means that the guy gets his job back and he can pay us. So I'm telling you this because it was a factual thing that happened in my life that really was an eye-opener. It's the truth. If I was a Merrill Lynch depositor, wouldn't I want Merrill Lynch to honor those rules? I'm not saying anything about the guy if he's a great stock trader or whether he ever defrauded a single person, but I can see the IRS's standpoint on denying a lien release in my client's case. And I lost. I'm telling you right now, I lost that case.
We have that same issue as practitioners with respect to getting an EFIN and getting your enrolled agent status renewed for the same reasons. You know, back in the day, when e-file was new and unique, you don't want a guy who has financial problems getting your social security number, getting a RAL for you, if you remember RALs, and that's
Yep.
the same thinking. And you may not realize this, every year you go through financial suitability. They're running your credit report, they're looking at the public record, which obviously has gotten easier and easier in recent years, but the government is watching to see what you are doing and what your situation looks like. So there's a follow-up question on the 6-year rule. Do you feel that applies to estates and trusts as well? And I'll add one note. With respect to estates, typically for assets to be transferred, most states have some sort of document you need to sign that says there's no tax and everything has been done and filed. But go ahead.
My answer is that the 6 years doesn't apply to those types of entities. I will follow up the answer by saying I don't have any experience. I have zero experience in the question, and it is my opinion that it does not apply, that the 6-year rule does not apply to estates. And for the same reason John said, is that you really kind of have to, like a corporation, those entities don't follow the same rules. You're supposed to do that stuff, even though it's a pain in the butt. But then again, it's fees to us people. You know, if you're one of the 97 people left here, you make money from preparing those returns. I know it's a pain, but and then you get into what that estate's going to do in offering compromise. The estate's going to do an installment agreement. So that there's to sort of shoot apples to oranges when it comes to the question. Sometimes when it comes to an estate, corporation wants to survive, and if the corporation's dead, there's a whole mess of practitioner. When I answer a question, say that the corporation should go file 17 years, I'm assuming the corporation's open and wants to do business and is a thriving business. So lots of times I will advise a client, you know, if you just closed your corporation and became a plumber for someone else, a lot of this goes away. All those $195 per shareholder for 24 months, nobody ever pays. So there's advice that's there. So now, John, how far do we want to carry this? Because don't we want to make money off this eventually?
Well, these are all your friends around here. You should see the things these people are writing about you. Oh my goodness. But I was going to say all the questions have been answered. So, the person with the $600,000, I would say you want to email Mark, Marc Dombrowski EA at gmail.com, and maybe set up a quick call and talk about the specifics. Either one of us, if you have questions or comments, email, phone call, any of that stuff is fine. We're both on Facebook. There is a representation forum on Facebook. Are you a moderator of that?
Yes.
All right.
Yes.
So so if you want to join that, Mark will happily add you onto it.
Well, you have to be the thing about the representation forum, and that's oh gosh, Tammy. Oh, I'm sorry that you're
Tony. She's on
Tony.
Here.
Tony is really the catalyst. I think I don't know why she added me as moderator, meaning that it really was her brainchild for the representation forum. I think I'm just a celebrity moderator, if you will. I don't want to say I'm in celebrity status, but Tony's really the driving force that started that. Tony needs to see that you are an EA. So if you ask to join,
or a CPA or an attorney, it's all Circular 230 people.
Okay.
Go on.
If your name doesn't say, like mine on Facebook says, Marc Dombrowski EA, if I ask to join, it's a no-brainer. Even when I see it, I'll add the person if they say that they have a Circular 230 in their name. A lot of people on Facebook just have their name. They don't think to do their status. So the point is that you need to private message Tony and tell her that you're an EA when you do ask to be added to the thing. Because a lot of times there's probably 15 people in there, and I don't know about Tony's time. I know I don't have time to private message 15 different people and ask them, are you an EA? And then they're just going to say yes.
Well, anyway, if you're interested, it's called Representation Forum. It's about 700 members in it, but it's pretty active, and there's some pretty smart people, and it's a great place to run things by us. I'm on there. Mark is on there. A number of tax court practitioners are on there, and they won't steer you wrong. So it's really worth going there. I can't speak as to how basic a question you can ask, but I think you can. So please join. So I think we're going to end it. There's no more questions. Obviously, this was proof of concept to make sure that Mark could follow directions, and he didn't, because he was supposed to come here to do the webinar. But that's fine. This is going to become something at least monthly, if not weekly. There'll be an advanced schedule, and I don't know that it's going to continue to be free, because I do have overhead and costs here, but we're going to figure something out. So thank you. Watch for the recording, and about by 6 p.m. you'll see the link, and by all means share the link with other people. In this case, not a problem, because again, it was free, and the fact that half of you are still on here after 2 hours of our nonsense is fabulous. It just speaks that you have nothing better to do today. But thanks again, everybody.
Thank you.